What's up guys, happy weekend and welcome back to the channel. You guys must have noticed how deep my voice is. It's not as if maybe I've gone for voice training, or maybe I've done something on my vocal, or done maybe a surgery or something. No, it's just because this is the heart of winter in South Africa and I'm actually suffering from common cold. All right, I'm actually sick. That's why you can see my voice is very deep. Even right in my office, you can see I'm here with the AC on 30 degrees. I have the floor heating is also on, everything, but it's actually still very cold. Winter in South Africa this year was very cruel. We even had snow in most part of Johannesburg this year, so you can just imagine. So I'm just recovering from my cold. But anyway, I already promised you guys that we're going to be doing a weekly analysis where I showed you guys most of the trades that I'm going to be taking for the upcoming week. I did this consecutively for 3 weeks in a row and then stopped. And when I stopped, I wanted to be able to see the feedback, because I was at that point in time, I believe maybe I was giving people too much fish, because I prefer to teach people how to fish instead of giving them fish. So when I did that consecutively, 3 consecutive weeks in a row and then stop, I received a lot of feedbacks. People send me emails, people send me DMs, people send me messages on WhatsApp, on my Discord private community in Godlove University, that please bring back this Sunday analysis. This helped me to pass my challenge. This helped me to get funded. This helped me to cash out in Forex trading. Please bring back the Sunday analysis. So I was like, okay, let me hear what my private students have to say. So I immediately went to Godlove University and I also did like a poll where I asked them like, okay, how do you guys see about this weekly analysis, or particularly the analysis we used to do on Sunday? The reason why I stopped was because I didn't want to give you guys fish too much than instead teaching you guys how to fish. Because when you give people signal, it's like giving them fish. They will need to rely on those signals for the rest of their lives. But if you teach them how to generate those signals, they will be able to generate the signals for themselves and even teach other people how they can generate their own signals. So I explained that to my private community, and they were like, we prefer the Sunday analysis, not that we depend solely on your own discretion or your own analysis or your own decision to be able to trade, but it just gives us an edge, or it just gives us an idea on how a profitable Forex trader analyzes and places trade. It just gives us an idea about the psychology of a profitable trader like you. So they explained. I was like, okay, this Sunday we're going to be bringing back the analysis. We're going to be bringing back the weekly analysis, and even on top of that, I'll even do Sunday analysis. Then within the week, we'll do something we call intra-week analysis. What is intra-week analysis? Intra-week analysis is something we're going to be doing on Wednesdays or Thursdays, where we're going to be going through the trades we program or the trades we analyze to take on Sunday. So the same trades I analyze, and I tell you guys, okay, we're going to be taking these trades on Wednesday or Thursday. We're still going to be doing another video to do like a follow-up to see how those trades are turning out, to see whether we're winning on those trades or we're losing on those trades. If we're losing on the trade, the lessons we're learning so far. If we're winning, how much account have I, or how much of our account have we been able to compound? So that's why I also brought in intra-week analysis. All right, so things are getting even more spicy. So make sure you stay to the end of this video. And before we even get into the video, the disclaimer: this is my own decision. This is for my own sole discretion. Make sure you do your own due diligence. This is not for investment purpose. All right, this is for educational purpose only. And if you're taking this on your live account or your investment account or whatsoever, make sure you do your due diligence and also be in the same wavelength with me. Also understand everything I'm saying on the video before you can use it as an investment decision. This is my decisions. This is my sole discretion. This is what is working for me. And make sure you also do your own due diligence to understand why I'm giving the signal I'm giving, or to understand why I'm giving the trade setup I'm giving. You can practice, please, all the trades I give on this particular video today. Make sure you take all the trades. If you can take them on your demo account, that is practice. That is practice. In the worst case scenario, take them on your demo account just to see how the trades are going to play out, just to see how you're going to manage the trade, just to see how just to see what goes on in the psychology of a profitable forex trader like me. So make sure you take the same trades, and if you do your due diligence and you understand what I'm explaining on the video, then you can take it on your private account, you can take it on your live account, you can take it on your funded account or your challenge account, your FTMO account, your My Forex Fund account, or whatsoever. All right, good. So with that being said, let's get into the video to see what we got for this particular week. And like I said, if you enjoy videos like this, please make sure you leave a like on the video. And if you're watching me for the first time, like I said, my name is Ndemazeah Godlove. I'm a 7-figure private and funded forex trader, and my goal and my mission on this channel is to be able to impact as many lives as possible. So if this is your first time watching me, make sure you smash the thumb up on the video and also smash that red button below to subscribe to the channel. We just recently passed 50,000 subscribers, and we are on our way to 100,000 subscribers before the end of this year. So make sure you subscribe to the channel and share this video to someone if you haven't done so. All right, good. So let's get into the video. Everything we're going to be doing on this video today, we're going to have 2 rules. The first rule is our risk to reward rule, which is very important. All right, the first rule is our risk to reward rule, which all the trades I'm going to be giving you guys, or all the signals I'm going to be giving you guys on today's analysis, we're all going to be risking 1% of our account. Remember, I have a rule. Anytime I'm trying to get funded, I risk 1% of my account. Let's just assume everything I'm going to be saying on this video today, let's just assume we are all on funded account, or we are all trading with challenge, with my forex fund, or funded next, or FTMO. So I'm just assuming, that's why I'm going to be mentioning big accounts. All right, let's just assume you have $100,000 funded account or funded challenge account that you're trying to get funded and cash out. Good. So our rule, all the signals I'm going to be giving you guys on this video today, we're only going to be risking 1% per trade. We're only going to be risking 1% per trade. I'm going to show you guys the formula that you'll be able to use to calculate, to know the exact amount or the exact lot size you have to be able to key in so that you can risk just 1%. I'll give you guys the formula. That formula, if you check over the entire internet, you can't see that same formula. It is based on experience, based on my 8 years of experience, that I have been able to come up with that golden formula. So stay tuned, and I'm going to be giving you guys that formula. Then secondly, all the trades, we're also gonna, all the setups or all the signals, I'm also going to be giving you guys today. I'm obviously going to be giving you guys the entries and the targets and all of that. And what is our rule again? We're only going to be risking 1% per trade. Meaning if you're having $100,000, the max you can risk on any trade is going to be $1,000. I'll show you based on wheresoever you plan on putting your stop loss, based on wheresoever you plan on putting your take profit, I'll show you how you can use this formula to be able to calculate, to know the exact lot size you can use so that you can only risk 1% per trade. All right, so that is our first rule for today. So let's go. Let's start with the first currency pair on our list, which is gold. And before we go into gold, let's talk about the formula. Based on whatsoever currency pair you have, this is the formula you're going to use to be able to calculate, to know the exact lot size you have to use. Let me even put this. Let me just calculate this. Where is my text? Let me just go here and I put here lot size to be used to risk just 1%, or to risk a specific percentage. Lot size to be used to risk a specific percentage on your account. Good. So that is the formula. I think I'm going to break this one down so that we have like this. Good. So this is the formula, right? This is the formula. Where is the equal sign? I think I'm going to put the equal sign. Let me just put this so that it can be very clear. Let me put, where is the equal sign? Good. That's it. Okay, so this is the golden formula. You can screenshot this, you can write this down, you can print this out and put on your wall, because this formula is going to save you, it's going to save a lot of lives. All right, this formula is going to save a lot of lives. So lot size to be used to risk a specific percentage on your account. What does it say? The dollar percentage risk divided by the pips risk, then the overall answer you get from dividing the dollar percentage risk divided by the pip risk, you divide that by 10. Why do we divide that by 10? That is because in Forex trading, a standard lot, if you either gain or lose, you gain or lose $10. That's why the overall answer we are getting here, we divide by 10. So let's take an example. Let's just take this particular trade somewhere here. Let's just assume this market was actually going down somewhere here, right? And here you assume on getting into the market. Let's just bring our short position. Let's just assume somewhere you assume in getting into this trade somewhere here. Maybe you were risking about 100 pips and you were going for 200 pips. So it's going to be somewhere here, risk to reward of 1:2. So yeah, the first rule, remember I mentioned the first rule was we're only going to be risking 1% per trade. And the second rule on all the trades I'm going to be giving you guys today, we'll go for a risk to reward of 1:2. Risk to reward of what? 1:2. Meaning if we are risking $10, we are going for $20. If we are risking 100 pips, we are going for 200 pips. All right? Risk to reward of 1:2. Meaning at the end of the day, even if we have to, even if we have seven out of 10 trades, even if we have 7 of those trades that are all losers, and we have 3 that are winners, we're still going to be making money at the end of the day. So what if you even have 4 winners and 6 losers? Even though you have a 60% win rate, you're still going to be making money. Even a 70% win rate or a 60%, a 30% win rate, where you win 30% and lost 70%, you're still going to be making money. Or a 40% where you win just 40% and lost 60%, you're still going to be making money. That is the power of risk to reward. So the risk to reward we're going to be going on today's trade is what? 1:2. So let's just assume we're actually following this particular trend, and based on this particular retracement here, this is what I used to call breathing in, when the market breathed in, because you can see overall this market was in a downtrend, and this consolidation is what I used to call a breath in. You can either call it a consolidation, a retracement, but just for you to easily understand, it's like a market. The market usually breathes out. Breathe out is when the market goes in the original direction, and breathe in is when the market retraces in the opposite direction. And so this particular breath in we had somewhere here, and after that we had this doji candle here. It was giving us a key reversal signal for us to join the original downtrend. So let's just assume you bought somewhere here and you have $100,000 account. So I want us to do all the calculation together, right? I want us to do the calculation together so that you know the exact lot size you can use to reach just a specific percentage. We're going to use different percentages so that you can be able to understand the calculation. And then at the end of the day, we'll also do reverse psychology so that we should be able to get the original amount for you to prove to you that the formula is actually working. So we have $100,000, right? Account size is $100,000. Good. That is our account size. And we're only going to be risking, let's just assume, let's start with the 100% risk. Let's start with the 1% risk, 1% risk per trade. 1% risk per trade. Good. So that is our risk per trade. We have $100,000. And we want to be able to risk 1% per trade. So how do you calculate that? What do you do? Let's use the formula. What is the formula again? The formula says dollar risk percentage. All right. So what is our dollar risk percentage? What is the percentage we want to risk per trade? 1%. All right. And what does it say? The dollar risk percentage. So it's $1%. So what is the dollar amount for 1% of $100,000? 1% of 100,000 is what? You just calculate 1% of $100,000 is $1,000. Everyone should be able to know how to calculate that. So 1% of $100,000, you just say 1 divided by 100 times $100,000, right? So that gives us $1,000. So that is 1% of $100,000 is $1,000. So what do we have here? We come here and we go on our text, and the first one up, we put there $1,000. $1,000. This formula is very, very important. So even if we have to take a few minutes to show you guys how to use this formula, you'll be able to use on any account size, on any account balance, on any margin. All right. So the first one up, we already have 1,000. Then divided by the pips risks. How many pips were we risking? You can see according to this our formula, we're risking a total of 100 pips and we're going for 200 pips. All right, so a total pips, how many pips are we risking? We are risking 100 pips. So we come here, we put overall divided by, then we bring in our text again, 100 divided by 100. So that's the formula playing out. Then overall, remember we said overall we need to divide down by 10, divided by 10. So you should be able to key in all the figures to have the final answer now. Remember, this is the lot size. The formula says lot size to be used. So any answer you get here is the lot size you have to use, so that if the trade doesn't go your way, you lost just 1%. And if it goes your way, you make 2%. So let's calculate. Let's divide 100. Let's divide 1,000 divided by 100. That is equal to 10. Then you divide the overall answer by 10. By 10 again. So the answer is 1. So the answer here is equal to what? Is equal to 1. So the lot size we are using here that will permit us to only risk 1% per trade is equal to 1. We'll do reverse psychology to see if the answer is actually correct. So the answer is 1. Very, very important. I don't care if I have to take a couple of minutes to show you guys this, but this is very, very powerful. So that is the lot size we have to be able to use on this particular trade, so that we can risk just 1% of our account. So let's do reverse psychology to see if we would have gotten the answer, if the answer is actually correct, right? So let's just assume now we've already gotten the lot size we want to use. So we come here, we go on our MT4 or whatever platform you are using, and where they say lot size, you just go there and you put 1. Remember, the answer is 1. So you put 1 lot size, and unfortunately, the market didn't go your way. If you are using 1 lot size, if the market has to go up or down, how many dollars are you going to be making? With 1 lot size, if the market has to go up or down, you gain or lose $10. So that is $10. Then how many pips are you risking? You are risking 100 pips. So if you calculate 10 times 100, you have 1,000. So it comes back to what? It comes back to the 1% which you were risking. So unfortunately, the trade didn't go your way, and you've risked and you've lost just 1,000. And 1,000 is what again? 1,000 is 1% of $100,000. What if the trade went in your favor? If the trade went in your favor, since you were using a lot size, if the market goes up or down, you gain or lose $10. Then you multiply that times 200. Remember, you were targeting 200. So you multiply 10 times 200. You just made $2,000. So you were risking $1,000 to go for $2,000. I hope the formula is very, very clear. All right. So we're using very, very rounded up figures. Let's use very abstract figures. Let's say maybe somewhere here you were risking something like maybe even 46 pips. You were risking 46 pips to go for. Let's still use a risk to reward of 1:2. You are using 46 pips to go for maybe 98 pips or something. Let's just assume that's a risk to reward of 46 times 2. Let's see, 46 times 2, that is 92. So let's just say you were risking 46 pip to go for 92 pips. So that is still a risk to reward of 1:2, but the figures are not just rounded as if maybe you are risking 100 pips to go for 200 pips. So let's calculate. Let's say, okay, you want to risk just 1% per trade again on this. Let's calculate now to be able to see. Let me just give you guys like a minute to calculate. Let's see the answer you get. Before, pause the video. You calculate, let's see the answer you get before you even hear my own answer, all right? Let me give you guys the figures so that you'll be able to use that to calculate. The account size, let me write out all the figures so that you can see. Account size, please take these exercises with me. Nobody is there to pointing a gun on your head to say, no, take this, but I'm advising you to take this because trust me, as you go ahead, whether 10 years from now, you will see this formula was the golden rule that you were supposed to know before you are trading in a private or challenge account, all right? So account size, these are the figures you need to be able to use to tell me the lot size we have to use on this particular trade so that we can risk just 1% of our account. So account size is what again? 100,000, all right? Then let's go down. What is the pips risk? We are risking a total of pips risk. We are risking a total of 46 pips, right? 46 pips.
Then what value? So we need that. Those are the other two things we need. We need just the account size and the pips we are risking. That's it. So use these two figures. Use these two figures here. Account size is $100,000 and the pip risk is 46 pips. So what lot size do we need to use so that we can risk just 1% of our account? Let me give you guys 1 minute to do this calculation. All right, so just pause the video, do the calculation, then write down your lot size. Then I'll be able to do the calculation together so that I'll see if you guys were following up. So use the same calculate the same formula I've given you guys to quickly do the calculation, get your answer, then I'll be able to also we'll do it together to see if you got the answer correctly. And always do reverse psychology to see if you got the same $1,000 or if you got the same percentage you're risking. So let's go.
1 minute later.
So 1 minute is up and let's do the calculation together. I know most of you guys got the answers correctly. I have a feeling most of you guys got the answers correctly. So let's do the calculation together to see if you got the answer correctly, right? So let's start. What is the dollar percentage risk? What is 1% of, how many percent do we want to risk again? 1% of our account. What is 1% dollar percentage risk? What is 1% of 100,000? 1% of 100,000 is what? Is 1% of 100,000 is 1,000. So you write your 1,000 divided by, what is the pip risk? How many pips are we risking? We are risking 46 pips. So divided by 46 pips, divided by 46, divided by 46 pips. So you just write there 46. That is it. Then this answer, we're going to be dividing this overall answer by 10. Boom, that's it, divided by 10. Let's see what you guys got. Divided by 10, which is equal to, sorry about that, which is equal to, let me get your answer. Good. So let's do the calculation. 1,000 divided by 46, which is 21.73. Then you divide that again by 10. So the lot size we're going to be using on this particular trade so that we can risk just 1% of our account is 2.17. All right. So since you always just round up to the nearest one decimal place, so it's 2.2. So the lot size we're going to be using here is what again? 2.2 lot size. 2.2 lot size. All right. So that is the lot size we're going to be using on this particular trade so that we can risk just 1% of our account. So how many of you guys got the answer correctly? Please let me know on the comment section. How many of you guys got the answer correctly? Let me know I'm so curious to know on the comment section. How many of you guys got 2.1, 2.17 or 2.2? Any of those answers are correct. All right, so that is the lot size we're going to be using on this particular trade so that we can risk just 1% of our trade. Now let's do reverse psychology to see if we're going to get if the trade doesn't go our way, if we're going to actually lose $1,000, right? So what if the trade doesn't go our way? Let's calculate. How many pips are we risking? We're risking 46. So we're risking 46 pips times. Remember, we are using 2.2 lot size. If you use 2.2 lot size and the market goes your way or doesn't go in your favor, you either lose or gain $22. So just multiply that by 10. You either gain or lose $22. And what is the risk on this trade? The risk on this trade is what? Is 46. So you multiply $22 times 46. That is what? $1,011. All right. Remember, we rounded up. So long as it is around 1,000, you are perfect. Your answer is correct. So that is $1,012. All right. Showing us that our answer was correct. If you use maybe 2.17 and you multiply that times 10, it would maybe 217. So it would have still come out around the same figure. But so long as your answer is around 1,000, that is still correct because remember we're rounding up decimals. But this is perfect. So we've just come back to the same $1,000, which is telling us that our calculation was correct. So let's just assume the market now went in our favor. Let's calculate to see if we would have made 2% of our account, right? So you come here, remember our risk, we are using a lot size of 2.2, and if the market has to go in our favor, we'll be making $22 for every 1 pip, all right? So you multiply that $22 times 92. Remember, we are targeting 92. We are going for 46 pips and we are targeting 92 pips. So you multiply that by 92 pips and you have now $2,024. That is equal to 2% of $100,000, which is equal to 2% of our account balance. So you use this formula based on if you want to risk 2% of your account, you just calculate 2% of $100,000. Now you instead of dividing 2,000 divided by 46, then you divide them by 10. Even if you want to risk 0.5% of $100,000 is equal to $500. So you divide $500 divided by 46, and then you divide that by 10. So you just use a formula based on any account size you have, any percentage you are risking, any pip amount you are risking, any stop loss, anything. The formula will be able to accumulate all of that and still give you the specific and the correct answer. You won't see this on baby pips whatsoever website. I think I mentioned this on Discord where people know. So go on the internet, dig the internet, and if you see this formula anywhere, bring it and bring it to prove me wrong. You won't find this anywhere on the internet. It's based on my own 8 years of experience that I have been able to come up with this formula, and it works and it helps me all the times. All right. So with that being said, I'm glad we've taken time to be able to get that out of the way. As we'll be going ahead, I'll just be mentioning the figures, assuming you guys already know how to calculate it. So let's start with our video. Let's start with gold. So on gold, if we can go on gold, let's just go on the daily time frame. Like most of the time, I always just like to see what is happening on the daily time frame. I can even see some lines we drew last time. All right, see, all our calculation is still here. So last time we concluded that gold was in an uptrend and we had a break of structure somewhere here. You can see the structure we had here. This was a break of this downtrend support line. And what did I tell you guys? I told you guys the main thing I'm waiting is a break and a retest. See what happened? The market actually break, retest, and now it is on a downtrend. Can you see a typical example of a break and retest structure? The market break the structure somewhere here, and I was waiting for a retest. The break and retest structure is just when the market break a particular support or resistance, then come back to test that same support or resistance. You can see the market break this particular support somewhere here, and price actually rally back to test that particular support, which became a resistance at that point in time. Boom! Confirming a break and a retest structure. So you can see the market started rallying down, but we actually had another section down here, which to the market break this section around somewhere here before I'll be able to confirm, okay, overall gold is in a bearish trend on the daily or on a daily time frame. All right, so what can we do? Let's quickly just go here. Let me take this off. Let's see what we can do on the 4-hour time frame and even the 1-hour time frame, because I actually think we'll have some trade setups on this particular currency pair. So on the 4-hour time frame, this is the same structure we drew. This is our same break and retest. This is our same break and retest structure somewhere here. The market breaks somewhere here and is coming to retest somewhere here. So you can see we're having like this rally structure here. We're having something like this, and where this is going to be our target, where we're waiting to see how the price is going to react somewhere down here. It might come down here and you see it just continue going up, or it come again, do this, continue going down, right? So in the meantime, we've confirmed that this market is in a macro trend on a downtrend, all right, on a downtrend. So let's go on the hour time frame to see if we have any trade setups we can take at the market open. At the market open, I can already see this. Let me just quickly delete this, so that we can have a very clear view on the 1-hour time frame. This is the 1-hour time frame. Let's go back to the 1-hour time frame. Good. So on the 1-hour time frame, I want you guys to be able to see this section we had on the 1-hour time frame, because on Friday we had a very key area of importance, which was this area. Remember, this is the 1-hour time frame. We had this key area somewhere here. This is very, very important. This key area somewhere here. See what price this? The price got rejected somewhere here, got rejected here, got rejected here, almost got rejected here again, got rejected here, and got rejected here. So can you already see something about this key level? So what is happening? The price has already gotten back to this key level, and since we concluded on the 4-hour time frame that this market was in a downtrend, let's look for how we can be able to come into this market and get a sell trade. So at the open of the market, we are selling gold. We're risking 1% of our account and we are selling gold. So where is our stop loss going to go? So let's go on short position. So we're selling at the open of the market, and this is where our stop loss has to go. Let me show you guys. Reasonably, let's put our stop loss on around, let's put it some, because I always like to give the market room to breathe. You can see this rejection that was somewhere here. Meaning if I put my stop loss here, there can be stop loss hunting that will strike me out of the trade. So let's put our stop loss on 90 pips, all right, on 90 pips. And since we are going for a risk to reward of 1:2, it means our take profit has to be on 180 pips. So this is our take profit, 180 somewhere here. So this is our take profit. We're going to be risking 90 pips and we'll be going for 180 pips. And we are selling gold at the open of the market. That is it. All right. So according to our analysis, that is it. If we sell gold and it doesn't go in our favor, this is what will happen. The market might actually come there, trigger our stop loss. It can happen. Come back to this particular level and you see continue shooting up. And if it goes in our favor, you expect to see something like this. It might come down, come here to test back this our particular resistance level, then you continue seeing, then it continue going and hit our take profit. So those are both scenarios. We are very, very prepared for both scenarios. Anytime you place a trade, to be able to trade with the psychology of Ndemazeah Godlove, to be able to trade with the psychology of a profitable trader, you should already plan for all the outcomes. I have already planned for all the outcomes on this particular trade. If it doesn't go my way, I'm comfortable to let 1% of my account go. And if it goes my way, I'm comfortable to risk, or I'm comfortable to get 2% of my account. Always plan the outcome of every trade. That is how profitable Forex traders like us, we concentrate more on the outcome of the trade than actually the money that trade is even going to make. So we concentrate more on the process than even the money. Talking about the process, that is a process. So now I place my trade and now I'm very, very confident because I've already, anytime I place that trade, I consider that 1% gone. I consider that $1,000 of my $100,000 gone. That is the mentality of a pro. Not that you are being pessimistic, not that you are being negative. That is just the mentality of a profitable Forex trader. Anytime you place a trade, consider that amount gone so that it won't give you psychological trauma. It won't drain you on being able to focus on another trade. So that is it. The reason we've already risked 1% on this trade, that is where we're going to be putting our stop loss. That is where we're going to be putting our take profit. Boom. So based on where we're going to be putting our stop loss, which is going to be on 90 pips, and also I've also given you guys the figure that we're only going to be risking 1% of our account. You can easily just calculate. If you're having something like a $100,000 account, use the same formula I gave you guys and you just calculate to know the lot size you'll be using here. If we have to use that same formula to calculate, I know you guys will be able to stop this video and just calculate and get the answer. Just calculate, let me know the answer you're going to get. We have a $100,000. We're only going to be risking 1% of $100,000 and our stop loss is 90 pips. So just calculate and let me know your answer. Good. I'm just going to pause the video for a few seconds and now let's calculate. I know most of you guys got the answer correctly. So 1% of $100,000 is 1,000 divided by what is the pip amount we're going to be risking? 90 pips, right? That is the answer, 11.1. Then you divide that by 10. So the lot size we're going to be using on this trade is 1.1 lot size. 1.1 lot size. If this market has to go in our favor, we'll be making 11 pips. And if the market has to go in our favor or against us, we'll be winning or losing 11 pips. And what if it doesn't go in our favor? So we'll just multiply this 11 times 90, which is equal to what? $1,000. You always do reverse psychology to see if you get the correct answer. So that is that about gold. Let's go to another currency pair, which is what? Great Britain Pound NZD. Oh, Great Britain Pound JPY, sorry. Great Britain Pound JPY. Let's go to Great Britain Pound JPY. Let's undo this, start with this. I always like to start on the daily time frame so that we'll see what is happening. All right. You can see it's not like I pre-planned anything. No, my chart is, I'm seeing it the first time you are also seeing it. I'm analyzing it the same time we are also. It's not like maybe I did a pre-analysis before. No, we're analyzing it live as it is. All right. So let's go on the daily time frame to see what has been happening on the daily time frame. Let's see what has been happening on the daily time frame. You can see this. Remember the last time we stopped our analysis, this is what we used to do. Let me even just go there to say this is what we used to do the last time we stopped doing weekly analysis. We had this figure somewhere here. So from here, which was around June 23rd to almost about July 23rd, almost a month, we haven't been able to do any more analysis. All right. So let's see what we have coming this particular week. On the daily time, sorry about that, guys. My son actually came into the office, saw that I'm on a video, so the mom has to take him away. That's why he's crying. Because anytime he sees me, he wants to be where I am. Anyway, yeah, so sorry about that distraction. Okay, let's go. So on the daily time frame, we can confirm on Great Britain Pound JPY that this market is still on a critical uptrend. Critical, very, very critical uptrend. On the daily time frame, you can see we had this trend. It has been on an uptrend for a very long period now. Very long period. We had Great Britain Pound JPY on an uptrend. That is our conclusion. Great Britain Pound JPY is in an uptrend. So let's go on a 4-hour time frame to see if we have any other trade coming this particular week, right? So we are more focused on what is happening in the market as of now. It is already concluded that gold is in an uptrend on a daily time frame. Then I can already see something here. I don't even need to go far. On the 4-hour time frame, which is where we're going to be taking our trade, most of our trades, we'll take most of our trades on the 4-hour time frame, and it's always seldom that we'll go on the 1-hour time frame to take our trade. So I already see a trade we can be taking here. Here on the 4-hour time frame, you can see something we had here. We've concluded that this market is in an uptrend, and on the 4-hour time frame, you can see this and this. What is this called again? This is called a double bottom or a W shape or a W pattern. A double bottom is also called a W pattern. So you can see the market from this. This was the first bottom and this was the second bottom, forming what again? Forming a double bottom. You can see that is the bottom I'm talking about somewhere here. So anytime you see a double bottom, what are you waiting? You wait for the neckline to be broken. So this was our neckline somewhere here. So long as this neckline is broken, that is where we're going to be taking our trade. So we'll take our trade somewhere here at the open of the market again. We're going to be buying Great Britain Pound JPY. Full stop. So since we've already seen that the market has given us this key reversal pattern, our main goal now is to see how we can get in on a buy trade. Because you can see this market was actually on a sell trade or on a sell trend on the 4-hour time frame, and here we got a confirmation that okay, a reversal confirmation that a downtrend has already turned to an uptrend. We actually had this double bottom. Anytime you have a double bottom, that is a key confirmation that the market has already changed trend. If it was a double top, you have a double bottom or a double top. A double bottom will show that okay, a downtrend has actually turned into an uptrend, and a double top or an M shape or an M pattern will show you that the market has turned from an uptrend to a downtrend. So in this case, we have a double bottom, which is confirming that the market has turned from a downtrend to an uptrend. Uptrend, which is what is the confirmation again? The uptrend is confirming the original trend we had on a daily time frame, because this market is originally on the uptrend. Great Britain Pound JPY has been in the uptrend for more than 2 months now, all right? So we want to only trade in the direction of the overall trend. And remember, these are more like swing positions. So long as you place these positions, you sit with peace of mind and you just let the market do its thing. As easy as that. So if we're getting in somewhere here, let's check to see where we can place our take profit. Remember, we are buying Great Britain Pound JPY at the open of the market. Now, our main problem is to see where we can put our stop loss. If we have to put our stop loss right down here at the bottom, we're going to be risking almost about 280 pips. We don't want to risk that much, all right? I want us to risk a maximum of 150 pips on this trade. So I want us to put our stop loss here. I want us to risk 150 pips and go for 300 pips. Risk to reward of 1:2. As easy as that. Risk to reward of 1:2. Right? 1:2. So we are risking 150 pips and we are going for 300 pips. So I already gave you guys the formula. we are risking just 1%. So just take 1% of the account size you have. You divide, you take that 1% of the account size you have the dollar amount, you divide by the total number of pips you're going to be risking, which in our case is 150 pips. Then you divide the overall answer by 10. You're going to be able to get the lot size you'll be able to use, you'll be able to get on this particular trade, or the lot size you'll be able to use on this particular trade, so that you can only risk 1% of that account size. All right, so that is that about Great Britain Pound JPY. And so long as we take the trade, there are only two scenarios. Either the market is going to rally up, that is it. Either the market is going to rally up. You can't just expect the market to just go boom. You expect something, a rally to hit our take profit, or in most cases, you might expect something like this, the market come test down, then hit our stop loss and continue going down. But since we are more bullish on the bigger time frame, we have higher points of confidence that this market is going to go in our favor. Let's go to Great Britain Pound. Great Britain Pound USD, right? Great Britain Pound USD, even just looking, I can already see a trade which has been forming on Great Britain Pound USD. We don't need to be going far, because if we go on the daily time frame, you can see this market is on a clear uptrend. Great Britain Pound USD is on a clear, very, very clear uptrend. All right, let's just quickly go here, and you'll be able to see what is happening on Great Britain Pound USD. The market is forming on what? You can see boom, 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 boom. So here, this is our key point of importance, because here we've already seen the market is forming what? Is forming higher lows, higher heights, higher lows, higher heights, higher lows, higher heights somewhere here. And here we have our higher low, which is where we're going to be getting in. Simple. We have our higher low on the higher time frame, on the daily time frame, which is where we're going to be getting in. Let's go on the 4-hour time frame to see the targets we're going to be using. As easy as that. Let me just undo this so that we have a clear chart to be able to easily see what we're going to be doing on the 4-hour time frame. All right, let's quickly go to the 4-hour time frame. We're going to be buying Great Britain Pound USD. Simple. We don't even need to go far to be looking at things. All right, so let's go here. Let's go back to this. Good. So here we can already have an idea on where we can put our target. We can already have an idea, because you had this one here, and you also had this one here. So we're going to be buying Great Britain Pound USD at the open of the market, and this is where our stop loss is going to go. Our stop loss is going to go reasonably somewhere here on 150 pips. We want to give the market a room to breathe. As easy as that. On 100, no, let's put it on 140 pips. Let's put it on 140 pips, and we'll be going for a risk to reward of 1:2, which is on 200. 140 times 2 is 280. So we're going to be putting our take profit on 280. So we are risking 140 pips, and we are going for 280 pips. So use the same formula I showed you guys to be able to calculate, to know the lot size you're going to be using on this particular trade. So that is the trade we are taking. We're buying Great Britain Pound USD at the open of the market. And remember, I told you guys, I'm going to be taking the same trade. We're going to be doing the same analysis. And we'll also do intraday on Wednesday or Thursday to see how these trades, are playing out, to see the ones we're winning, to see the ones we're losing. The ones we're losing, we'll see the lessons we're getting from those particular trades. Perfect. So that's Great Britain Pound. USD. Let's go to Euro JPY, one of my favorite pairs. Let's go to Euro JPY, and let me just quickly delete this so that we have a clear chart. All right, let's just quickly delete this so that we have a clear chart and we don't have all these drawings on the way. Good. Perfect. So for Euro JPY, we're beginning to have a clear chart. We're not so concerned about what is happening down there. So if we have to go on the daily time frame just to have an idea on what is happening on the daily time frame, we can already see that Euro JPY is on what? Very big uptrend. Very big uptrend. The market is bouncing on lower low, on higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. Then the market is actually rallying up to form another higher highs. So that's where we need to be a little bit careful, because the the market is getting a little bit overbought. If you're somebody who uses indicators, though I don't rely so much on indicators, I don't even believe on indicators, but there's an RSI, and the RSI you have the overbought and the oversold, all right? So this market is already getting to the overbought region, which when the market starts getting to the overbought region, there's a high probability it might sell. So we need to be able to trade, we need to be able to treat this particular currency pair with some caution, because the market is getting a little bit overbought on the daily time frame. All right, so this is what, let's measure this to see the distance from year to year. Let's quickly measure this. So this distance is almost about 400, that's almost about 490 pips. All right, let me just confirm two here. Let me just quickly confirm here. Euro JPY 4-hour time frame, because when I always like to use MT4 sometimes to just confirm my my figures. So if I can measure that, that's almost about Euro JPY, right? And it's on the 4-hour time frame. Euro JPY 4-hour time frame. We have that. Okay, we're taking it right down here. Okay, that's almost about 400. Good. So here, sorry about that. So what we're going to be doing at the open of the market is we should instead be trailing our stop loss somewhere here, because this market, I'm seeing this market might open and you see something like this. You see something like this before you start seeing this, because it's in an overall uptrend. That is it. It's in an overall uptrend. So you might see the market coming down to test this area somewhere here. All right, so I think we shouldn't get into this particular trade at this point in time. We should wait. If the market has to come back to this particular support somewhere here, because we are beginning to form a support and resistance, if the market has to come to this support, we'll instead buy somewhere here. And if it doesn't come to this support and at the open of the market it continues going up, then we'll instead wait for the market to push up, breathe in a little bit, and we'll instead buy somewhere here. At the point where the market has actually breathed in, that is where we'll be able to buy. At that point in time, it will give us a maximum area where we can put our stop loss and a maximum area where we can put our take profit for the proper risk management and for a proper risk to reward. All right, so this pair, we're just going to watch this particular pair. We're just watching Euro JPY. If the market has to push back to this support, we're going to be buying here, and it continue pushing up. We'll wait for the market to breathe out, breathe in, for us to get in somewhere here. Those are the two scenarios. One of those scenarios are actually going to play out, and then we'll take the trade. Let's go to Great Britain Pound AUD. Great Britain Pound AUD daily time frame. What is happening on Great Britain Pound AUD? Let's see what's happening on Great Britain Pound AUD. On Great Britain Pound AUD, still an uptrend. Still an uptrend with no doubt. Still an uptrend. Let me just delete this so that we can see. Sorry about that. So let me just quickly delete this line so that you guys can see very, very clearly. So Great Britain Pound AUD is in a key uptrend. I don't even need to go far to see that. I don't need any indicator to see that. I don't need any tool to see that. It's clear uptrend. Clear uptrend. From here, lower, higher lows, higher highs, somewhere here, higher lows, somewhere here, higher heights. Higher heights. Sorry guys, I'm actually higher heights somewhere there, and the market has actually tried to form another higher low somewhere here. Boom, we've already confirmed the market is in a clear uptrend. Boom. That's a clear uptrend, right? Good. So let's go on a daily time frame to see if we can be able to scalp in or take a swing position on this currency pair. So let's quickly go on the day on the 4-hour time frame. Sorry about that, guys, if my voice keep changing. Remember, I'm actually suffering from cold. This is the heart of winter in South Africa, and the winter this year is cruel. We even have snow in South Africa, so the winter this year was cruel. Everyone, I, my son, my wife, will all suffer from cold. So that's why you see my voice is still trying to recover. But anyway, I'm going to still try as much as possible to bring the analysis to you guys, all right? Good. Sorry about that. Good. So if we can see here on the 4-hour time frame, let me just zoom this out on the 4-hour time frame so that we can be able to see clearly on the 4-hour time frame. 4-hour time frame. We're looking for an opportunity to scalp in a buy position. And from what I'm seeing on the 4-hour time frame, this is more like a waiting scenario. We'll have to wait a little bit, guys. We'll have to wait a little bit, because if you can see on the 4-hour time frame, this market is actually on a downtrend on the 4-hour time frame. So this is what we're going to do. We're going to wait for the market. If we can measure this, let me see if we can instead scalp in a sell position. All right, let's see the distance. Let me see this particular distance. Let me measure from here to here. Okay, that's almost about 267 pips. 267 pips. So let's scalp in a small position here. But bear with me, if you are scalping in a small position here, you need to have it at the back of your mind that overall on the daily time frame, this market is in an uptrend. So if you are scalping in a small position here, the main reason why you are scalping in that position is because you know the market has the ability to come back here before it continues going up. All right. So we're just going to be entering somewhere here. We get out of the trade somewhere down here, because we know overall when you get into this kind of trade, your heart is a little bit trembling, because you know you're kind of like doing counter trading. You're kind of going contrary to the overall trend, all right? But on this particular trend, I can see the market is on a downtrend. So let's take a sell trade on this particular currency pair. Let's quickly take a sell trade. So we're going to be selling Great Britain Pound AUD at the open of the market. Remember, let's try to scalp in some few pips before the original trend one will resume, all right? Good. So we're going to be selling somewhere here. Our stop loss will go on 100 pips, and our take profit will go on 200 pips. Risk to reward of 1:2. So those are the figures for Great Britain Pound AUD, and this will either happen. The market will actually rally like this to hit our take profit, or the market might open, you see something like this, rally back to this support, then boom, boom, hit our stop loss. If it hits our stop loss, that is a confirmation that the market is continuing on the uptrend. We'll wait down for a retracement to this particular key area, then we'll buy somewhere here. As easy as that. Even though we're going to hit our stop loss, but we're going to be able to see a key area where we can get in. And since we are risking 1:2, we've just lost 1% of our account. If we get in somewhere here and make 2%, we've just covered up the 1% we lost, plus now plus 1%. We are still up with plus 1%. We've just made 1% of our account. That's the importance of having a good risk to reward. So that is that about Great Britain Pound, AUD. Let's go to Euro Great Britain Pound, right? Under Euro Great Britain Pound, I can see more like a consolidated market. Let's see what has been happening. Let's see what has been happening on this. Let's go to the 4-hour time frame to see. Like I said, I'm seeing it the same time. We are all seeing it together. So it's not like something I pre-recorded to come and show you guys. No, I wanted us to do the analysis together, to take the trades together. These are the same trades I'm going to be taking on my challenge and funded account. The same trade. So I need to treat it with a lot of caution, right? I need to treat it with a lot of caution. I'm just removing this so that we can still confirm if this market is in a downtrend. All right? So you can see here, this market has been in a downtrend, was in a downtrend up to this particular key area. This market was in a downtrend up to this particular key area where we saw this particular key structure again, which is a double bottom or a W pattern. Anytime you see a double bottom or a W pattern, that is a key indication that the market has changed the trend. So the market actually changed from a downtrend to an uptrend. So the market on Euro Great Britain Pound is actually on an uptrend as we speak. And you can see even here on the daily time frame again, you can see the neckline was actually broken. So this gives us a key confirmation of a break and a retest. So this one, you see more of a break and retest if we go to the 4-hour time frame, because the neckline was broken somewhere here. This is a key area where our neckline was broken. Let's put this somewhere here, then go on the 4-hour time frame to confirm. So on the 4-hour time frame, guys, can you see what we did on the daily time frame? Key confirmation on the daily time frame. We don't even need to go anywhere. So we buy Euro Great Britain Pound at the open of the market. Perfect. No doubt about that one. We already confirmed that Euro Great Britain Pound was on an uptrend, and here on the 4-hour time frame, we've also confirmed a break and a retest structure. Remember, when I do my analysis, I use the simple terminology ever. My terminology is as simple as possible so that any basic person, any person at level 0 can be able to follow my analysis and still place trades and have winners. I don't want to start using liquidity grab. You can see the market is coming in to do liquidity grab. After that, we'll have some bullish momentum pumping in to give you psychological levels. No. I know all those terminologies, but knowing all those terminologies doesn't guarantee that you make money in the market. That's why they used to call me the king of simple Forex. I use the simplest terminology so that even somebody on level 0 will still be able to place those trades and make money. As easy as that. All right. So you can see the market has actually come back to this particular break and retest is just a structure like this. You can see a break and retest. This key structure was broken somewhere here. And what do you see? A break and retest, you just have a key structure. Then the market break that structure and then come back to test that structure. That is just a break and retest. Break that area, the market break that area, then come back to test that area. So this is where you actually get in. So the same structure we are seeing here is this one. You can see the market break that area here, then come back to test somewhere here. So we're going to be getting in somewhere there. As easy as that, right? So let's bring in our long tool because we're going to be buying at the open of the market. Our stop loss is going to go somewhere here. Let's put our stop loss on 50 pips, all right? This one, we're not going to be risking that much. Or let's put our stop loss on 60 pips and we're going to be going for 120 pips. 120 pips, there you go. 120 pips, that's 120 pips. So a risk to reward of 1:2. That is the trade we're going to be taking on Euro, Great Britain, Pound. As easy as that. All right, good. Let's go to Euro AUD. Quick, guys, so that we can cover as many currency pairs as possible. I don't want the video to be too lengthy, but you need to watch to the end so that you can be able to see the analysis on the key currency pairs. All right. So let's quickly go on Euro AUD. On Euro AUD, I'm just going to start on the daily time frame. No need worrying to delete all these things because I can already see what's happening on the daily time frame. Let me just quickly delete this so that we can be able to have a clear view on what is happening. All right. I don't want to take off everything. If not, I would have just highlighted everything and take it off. But I still want this structure to be there. So you can see the market was in a downtrend, and here we had a similar structure. We still had a similar structure somewhere here, a key break and retest. We had a key break and retest. The market came somewhere here, break here, come here and retest, and now it is going up. So what are we waiting? We'll instead wait for a retracement on this particular currency pair. All right, we'll wait for a retracement on the 4-hour time frame before we can get in. So let's go on the 4-hour time frame and see. So on the 4-hour time frame, we can already see this structure. Let's see, we can already see this particular trend. This particular trend being formed somewhere here, right? So we can already see that particular trend. So what are we going to do? We have two scenarios we can actually look out for. We can look out for this particular scenario. So let's wait. We have to wait. We can't take a trade. If the market has to come back somewhere here, we'll be waiting for a break and a retest. Because remember, the overall on the daily time frame is an uptrend. The market already changed from a downtrend to an uptrend on the daily time frame. So we need to have that at the back of our mind. And if the market has to push right down here, then we'll be waiting to buy instead down here. So those are the two scenarios. This is a key point where we need to watch to see where the market will be going at the open of the market. So this one, we're just going to watch. If any of these scenarios play out, we're either going to buy here or wait for a break and retest, and we buy somewhere here. As easy as that. So for Euro AUD, that is the setup we have on Euro AUD. So we're not going to be taking any trade on Euro AUD. On Euro USD, I can already see a key structure, which is a key reversal signal. Anytime I see that, I can already start seeing a buy trade. If I have to go on the daily time frame, I don't even need to go far. I don't even need indicators. Even without removing all of this, you can see the market on the daily time frame is on a key uptrend. That's it. It's on a key uptrend, all right? You can see this particular trend line on the 4-hour time frame, which was broken somewhere here. See an example of a key thing we used to call the break and retest. Can you see this? This was a key example of a break and retest somewhere here, all right? And this particular trend again, what are we seeing? We can already see the market might be trying to come back to test this particular area somewhere here. So it wouldn't be wise if we are trying to buy somewhere here. That is what I'm seeing. It wouldn't be wise if we are trying to buy somewhere here, even though at the on the 4-hour time frame or the daily time frame, we have confirmed that the market is in an uptrend. So what we have to do is let's wait to see the market reaction at the open of the market. The market might actually rally right down here. What is the distance? Let's see the distance for that particular rally. That's almost about 140 pips. 140 pips. Or the market might actually open and you see something like this. All right. So if the market open and you see something like this, at the point where the market break in, we'll be looking to buy so that we can jump into the trend. But for now, I wouldn't advise us to sell because we'll actually be going contrary to the overall trend, which is a bullish trend on the daily time frame. So let's just watch this currency pair to see what will happen at the market open. And if the market open and we have any of these scenarios, then we'll be looking to instead buy or sell. So let's go to Euro JPY. Euro JPY, let's see what's happening on the daily time frame. What's popping, Euro JPY. Euro JPY is on a key uptrend on the daily time frame. You can already see bouncing on the higher lows, higher highs, higher lows, and it's going to form another higher heights. So I can already see we are bullish, we're buying Euro JPY. Let's only look for where we're going to be getting into the trend now. So if I come here on Euro JPY, let's measure this distance from here to here to see how long. Because the market was beginning to get overbought, all right? If the market start getting overbought, then that's where things start getting a little bit scary, a little bit. So if we come right down here, because this trend, this is where things are a little bit scary, this particular trend somewhere here. This market has the ability to come back, right back to this particular trend before it continues going up. So you need to have that at the back of your mind. So if we're buying somewhere here, we're going to be risking, we're going to be risking 200 pips. We're going to be risking 200 pips on Euro JPY. We're going to be risking 200 pips to go for 400 pips. 400 pips is going to be somewhere here. That's a risk to reward of 1:2. So that's what we're going to be doing for Euro JPY. We're going to be buying Euro JPY, stop loss at 200 pips and take profit on 400 pips. All right. So that is that about Euro JPY. I'm a little bit scared because like I said, the market might actually come back here before it continues going up. So we can instead push down our stop loss a little bit to maybe 230 pips, and we go for now 460 pips. Very possible. This trade can even be open for a week. These are all swing positions. It's not scalping going up. No. You can take these trades and then within the week you are still scalping, but these are more of swing positions. So that is our target. We're going to be risking 220 pips and we'll be going for 440 pips. Remember, on this particular type of setup, what is happening? What is happening is we try as much as possible to only risk a specific percentage of our account. Then we just sit and watch the market play out. So that is what we're going to be doing on Euro JPY. All right, good. So let's go to CAD JPY, another favorite pair. CAD JPY has the same kind of setup with Euro JPY because anyway, they all have JPY. And JPY, for me, I consider JPY most of the time as a safe haven currency, meaning any currency pair that has JPY as the currency, as one of the currencies in that currency pair, will be able to have a unidirectional trend, meaning you wouldn't have too many consolidation. Because if the market has to go up, JPY is more like a silent, it's more like the weaker, it's more like the safe haven currency pair. So JPY wouldn't be battling, wouldn't be fighting with the opposite currency pair. That's why you see Great Britain pound JPY. If it has to trend in a bullish direction, it will trend. If it has to trend in the opposite direction, it will trend. You won't see too many consolidation. You see something like Euro JPY. If it has to trend in one direction, it goes in one direction. You see something like CAD JPY. Any currency pair that has JPY as one of the currency in the currency pair is very good to trade because JPY is considered as a safe haven currency pair. So here we're going to be doing the same thing. I don't even need to go on the daily time frame. Canadian dollar JPY is in an uptrend, so we're going to be buying this market at the open of the market. And buying this market at the open of the market, that is it. Where is our stop loss going to go? Where is our take profit going to go? So we'll buy somewhere here. Let's put our stop loss on 150 pips because the market might actually be trying to clear this one. So let's put our stop loss on 150 pips and we'll go for 300 pips. As easy as that. 300 pips, 150 pips, 300 pips on CAD JPY. As easy as that. There are a lot of dope setups that you can take this particular week. Remember, throughout this particular video, we're going to have almost about 8 to 10 different setups that we can take. Out of those 10 to 8 different setups, we're just looking to have 4 right. To just have 4 of those setups right out of 10, we're still going to be making money. Let's do the math. If we have 4 right, we're making 4 times. Anyone who have right will make 2% of our account. So we'll have 4 times 2. So we just made 8% of our account. Then if we have 6 that are losers, we just lost 6% of our account, because remember, we are only risking 1%. So we made 8% and we lost 6%. At the end of the day, we are all with plus 2% of our account. If you go to a hedge fund and you show them a strategy that can make 2% consistently every month, they will hire you to trade for them. That is how powerful this particular system and this particular strategy is. All right. So that is that. So that is a trade. We're going to be buying JPY at the open of the market. Stop loss 50 pips. Take profit 300 pips. Sorry, 150 pips. Stop loss 300 pips. Take profit. Good. Let's go to NZD/USD. NZD/USD was popping. Let's go on the daily time frame. I can see a lot of noise on this particular currency pair. So on the daily time frame, we can already confirm this market is consolidating on the daily time frame. It's consolidating, it's forming this. I can't say for clear that it is either a downtrend or an uptrend. It's more like a slanting downtrend, but for me, this is actually consolidating. All right, this is actually consolidating, because even if you have to mark it from here to here, then you mark from here to here, this market is still consolidating. So this is a consolidated market. It's neither going up or down on the daily time frame. 4-hour time frame, what's happening? What's popping? If I have to check on this particular area, this area is already violated. This area somewhere here. It's already violated somewhere here. So the next area which is of importance is this area somewhere here. This is the next area of importance. This one somewhere here. All right, and you can see the speed the market is using to go to that particular area. You can see the particular speed. So most of these areas were already violated. So what's happening? This one we need to actually wait. We need to wait to see. This might actually happen. This will actually happen. The market will push back here to do what they call a break and a retest. If this market has to push back here to give you a break and retest, we're going to be selling somewhere here. As easy as that. We're going to be selling somewhere here to expect the market to rally right down here. And if we come back here and break this area and instead come back and did a retest here, then we'll instead be looking to do what? To buy somewhere here for this to happen. Like I said, it is neither going up or down. It is neither in an uptrend or a downtrend on the daily time frame. So that's what we're going to be expecting to happen, or that's what we're going to be doing on this particular currency pair. There's no trade on this particular currency pair as of now. Let's go to AUD/USD. AUD/USD was popping. Let's go to the daily time frame. Daily time frame, AUD/USD is more like a consolidated trend. I can see more like a consolidated market here. More like a consolidated market on AUD/USD. No good setup as of now. And the market is getting to be oversold. Anytime the market start getting oversold, you start looking for a buy opportunity, and anytime the market start getting overbought, you start looking for a sell opportunity. So what I'm seeing is this particular area somewhere here where the market formed this double top. Then I'm also seeing this particular trend somewhere here. Good. So this market might be coming to test this. We'll be looking to buy is somewhere here. So let's quickly go to the daily time frame, to the 4-hour time frame, and I'll be able to show you guys what I just did very, very clearly on the 4-hour time frame. Perfect. This is a 4-hour time frame, and we're going to wait for the market to come back here, and we'll buy somewhere here. If we're buying somewhere here, our stop loss will just go here, and we'll be going for a risk to reward of 1:2. Very, very simple. Very nice setup. So let's wait at the open of the market. If the market rally down here, we'll be waiting to buy somewhere here. But if it continues going in the opposite direction, then we'll need to wait for the market to come back to this same resistance for us to sell. As easy as that. Now the market is in the middle, and we can buy or sell at this point in time. You just need to follow those particular steps. Let's go to AUD/JPY, another good currency pair which we can't talk about all this currency pair without talking about AUD/JPY. On AUD/JPY, what's popping? Let's go to the daily time frame. Daily time frame on AUD/JPY. Let's see what's happening on AUD/JPY. All right, this one good. Currently, you can see the market bounce from almost about 2022. The market used to bounce on lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. Then the trend was broken somewhere here. This is where this particular trend was broken. Anytime you see the market moves from lower low, lower highs, lower low, lower highs to higher highs, higher lows, that is an uptrend. So the market has turned down from a lower trend, from a downtrend to an uptrend on the daily time frame. So let's go on the 4-hour time frame to see if we can scalp in any buy trade. All right, is this market already overbought? Let's zoom out to see. Let's zoom out to see. I can already see a kind of a scary setup somewhere here. I can see the scary setup somewhere here where we might be expecting the market to instead rally from here to here. That's almost a distance of about 200 pips. So yeah, we can actually take a scalp here, guys. We can actually, even though this market is on a buy trend on the daily time frame, while waiting for the market to push back to this particular area for us to buy, we can scalp in a small trade. We can get in here with a very small trade, short position. At the open of the market, we're going to be selling AUD/JPY. Our stop loss is just going to be here. We're going to be risking very, very small. We're just going to be risking 80 pips. Let's risk 85 pips. We're just going to be risking 85 pips to go for 170 pips. Where's 170 pips? That's it. 1:2. That's it. So that is it. That's what we're going to be doing on this particular currency pair. Remember, at the back of our mind, AUD/JPY is on an uptrend. It's on an uptrend. The uptrend has just resumed on the daily time frame. But while waiting for the market to come here to test this particular support for us to buy again, let's cap in a position here where we're just going to be risking 80 pips to go for 100, 85 pips to go for 170 pips. If it doesn't go our way and we hit our stop loss somewhere here, then that might be a confirmation that the bullish trend is very, very strong and there is no time for it to even consolidate. So we instead be looking to buy at that point in time. So that's a trade we're going to be taking. We're going to be selling AUD/JPY at the open of the market, stop loss on 85 pips, take profit on 170 pips. Risk to reward 1:2. Let's go to the next currency pair, which is the US30. Most of you guys have asked about Nasdaq. Which currency pair is this? June. Oh, this one was discontinued. This one was discontinued. So we actually have to search on US30. Let me delete this. Then we actually have to search on US30. Let's search on Nasdaq or US 100. Let's start with US 100, guys. Most of you guys have asked of Nasdaq. So let's start with Nasdaq. Okay, so we have Nasdaq somewhere here. Let's just put it right up here and we'll go on Nasdaq. So we have Nasdaq somewhere here. This is July 23rd. Let's go on a daily time frame, as fresh as the chart is, to see what is happening on Nasdaq. Nasdaq is on a typical uptrend. We don't even wait for the market to load. And what are we seeing? Boom. Higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. Then you see higher highs, and then the market is forming higher lows again somewhere here, which is giving us a typical buy opportunity. So I can already see us buying Nasdaq, US 100. You can either call it US 100, US Tech, or Nasdaq. So I can already see a buy set up on Nasdaq. All right. So let's go to the 4-hour time frame to see what we got here on Nasdaq. On Nasdaq, this key area I'm seeing here is the key area of importance. This area somewhere here, this one here, this one here, this one here, and this one here. So even if we're buying somewhere here, we need to be very wary of this particular area somewhere here. All right, so this is the one we need to get. Our targets needs to be open. It's either we wait for the market to come right down here for us to buy here, but in most cases it doesn't come right down here. So long as I already have the confirmation that this market is in a strong buy trend, I instead give my market a greater portion for it to break. I instead give a greater portion for the risk to reward. So we're going to be buying Nasdaq at the market open. We're going to be buying Nasdaq right there. Our stop loss needs to come below this black line, which is going to be at 282 pips. All right, below this black line, 282 pips, and we're going to be targeting 200. The risk to reward of 1:2, which is going to be somewhere here on around 600. Let's just go to 600 pips. So we're going to be risking 282 pips. 282 pips, and we're going to be going for 600 pips. Or risk to reward of 1:2. Let me see, this amount here is 282. You just multiply that by 2, and I'm still on the risk to reward calculator here. We need to push this one down a bit, and that is boom, 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 boom. Let's see. Risk to reward. So we're going to be going for 574 pips, and we're going to be risking about 282 pips. So that is that. So we've given this market room to breathe. So the whole of Monday, as soon as we buy this particular market, the whole of Monday we might be in the negative. Even Tuesday we might still be in the negative. But overall, so long as the trend has already resumed, we'll be able to go in. We'll be able to go in the money and even hit our take profit, because remember, overall the trend is a bullish uptrend. The trend is an uptrend. All right. So that is what will happen on Nasdaq. On Nasdaq. So let's go after Nasdaq. Let's go to US 30. US 30 is another index. We can't finish without talking about US 30. This is one of my favorite as well. Let's go to US 30 and also see what's happening on US 30. Let me push that right up here. Then US 30 was popping. I don't even need to go far. If you go to the daily time frame, it's just another confirmation that this market is in an uptrend. So key area of importance is this area. That's our key area of importance. That area. We also had this particular area somewhere here. So since we already know this key area is of importance, this, we know this, we know this, we know this. Let's wait to see what happens to this market. You might actually see something like this, where the market comes down to test this particular area. Or since we also have another macro resistance somewhere here, if the market has to push to this particular key area, then we'll be looking to buy somewhere here. And if we're buying somewhere here, our stop loss is going to go here, so that if it breaks this area and continue going down, then we'll be stopped out somewhere here. But if we buy here, then we'll go for a risk to reward. So we'll be risking this to target now, risk to reward of 1:2. So for US 30, there's no trade on US 30 as of now. Let's go to Euro NZD. So we just have about 3 or 4 different currency pairs. We just have 3 currency pairs left, and we'll be done for the day. So please stay with me. Let's go to Euro NZD. Euro NZD is in an uptrend on the daily, on the 4-hour time frame. Even if you have to zoom in, you can already see it is in an uptrend even on the daily time frame. I don't even need to go to the daily time frame. All right. So since the market is getting a little bit overbought, let's look for where we can possibly get into this particular trend. We had this area somewhere here. We also had this area somewhere here. So this market we might be able to see something like this retest. So it might still go up a little bit, then come back to retest this area, and we'll be looking to buy somewhere here, because we've already confirmed that the market is in an uptrend. So that is that for Euro NZD. There's no trade for us to take on Euro NZD for now. You just need to monitor to see what is happening in the market. Let's go to EuroCAD. Under EuroCAD, on the daily time frame, on the 4-hour time frame, let me see what's happening. I can already see. Let's see what's happening on the daily time frame to have an idea of where the market might be going at the open of the market. Good. So the market was actually forming higher lows, higher highs, higher lows, higher highs, then higher lows, higher heights, and then this higher low was broken somewhere here, and then I'm beginning to see this console. I'm beginning to see the market again forming this area, this break and retest somewhere here. So we're going to be buying EuroCAD, because I can already see this reversal signal, this reversal candle, which was the whole of Friday. So we're going to be buying EuroCAD, our stop loss somewhere here, and we're going to be targeting up here. Full stop. We don't even need to analyze and go far. I can already see that. Good. So we're going to be buying EuroCAD at the open of the market. Stop loss is just going to be here. So that is that. EuroCAD is going to be on a buy. Stop loss is just going to be here on 120 pips. Let's go to 125 pips. Let's go to 125 pips, and we're just going to be targeting 250 pips. That's it. 250 pips, and we're done. Risk to reward of 1:2. So that's that for EuroCAD. That's the trade we're going to be taking on EuroCAD. Let's go to the next. We have 2 currency pairs left on our list, which is we're going to be talking about Great Britain pound card. Under Great Britain pound card, you can see we had this setup which was from last week. When was this? July 23rd. So we're just going to be removing this, removing this, removing this, removing this, removing this, so that we can be able to have a greater view of the market. This is a 4-hour time frame, and most of these structures were drew right from the 23rd of May. These same structures were there. See what I predicted for it to happen. I predicted this to happen for the market. If I have to undo this, you can see. Can you see this? I predicted for the market to come here and push back to this particular area. So you can see that is what is actually happened, and there is nothing we can do at this point in time, right? So we just have to wait. We just have to wait for the market to rally down to this particular area for us to buy here. As easy as that. If we're buying here, stop loss here, risk to reward of 1:2. So let's just wait on Great Britain pound card. Let's go to USD card to see what's happening on USD card. USD card daily time frame was popping, We're rounding up. After this, we have the last currency pair. Let's see. Euro card. On Euro card, I can see a typical downtrend. It's more like a consolidated market, but this can give me confirmation that this market is in a downtrend on the daily time frame. And I can already see somewhere this rally somewhere here. Let's see on the daily time frame, on the 4-hour time frame, if we can have a possible trade somewhere there, right? So if we come here, because the market might be trying to rally right up to this particular area, and even if it's trying to rally up to this particular area, we need to be very, very wary of this particular area, because if we're buying here, the market might actually hit this area and turn back, right? So let's wait again. Let's wait. If the market has to come here, we'll buy here. Be looking to buy here, and if it continue going up, these are situations where we just wait. We'll be able to wait for the market to rally up to this particular resistance, and we'll always say somewhere up there. So there's no confirmation for us to take any trade as of now. Let's check the last currency pair on our list, which is what? Which is AUD NZD. AUD NZD. After AUD NZD, we'll talk about NZD JPY. Very, very good currency pairs. And remember, these are swing positions. These are swing trade, meaning you don't need to be worrying about spread commissions. You take one trade and it's there for a while, and you don't even need to worry about the spread or the commissions. Good. Let's see what has been happening on this currency pair on the daily time frame. On the daily time frame, we had this market is more like consolidating. This is a consolidated market on the daily time frame. Consolidated market, and it's trying to form like a triangular pattern, right? It's trying to form like a triangular pattern on the daily time frame. So we're still going to wait again here on the 4-hour time frame. I think we're going to wait. More money is made in Forex trading waiting than actually trading. Very, very important. More money is made in Forex trading waiting than actually trading. Because remember, most of these trade ones, we've already taken them. The only thing we do is just to wait. Just to wait. You just keep waiting. You either wait to take the trade, and even when you've taken the trade, you keep waiting. So more money is made in Forex trading waiting than actually trading. So what is the waiting game on this particular currency pair? We're going to wait for the market to come back to this particular support at the market open, or if it continues going up, we'll wait for the market to go to that particular resistance, and we'll sell somewhere here. If the market gives us a sell signal, and if it comes here, we'll buy here. If the market gives us a buy signal, and if it comes here and break this area, then we'll wait for a break and retest, and we'll instead buy at that particular break and retest. So that is that for AUD NZD. Let's check the last currency pair on our list, which is NZD JPY. NZD JPY was popping. What's happening on the daily time frame? On the daily time frame, don't even need to go far. This is clearly an uptrend. All right, this is an uptrend on the daily time frame on AUD NZD. AUD NZD. This is a clear uptrend. The market is bouncing on what? Higher lows, higher highs, higher lows, higher highs. All right, clear uptrend on the daily time frame. So what might be happening? The market might be coming back here for us to look for a buy opportunity. And in the meantime, let's see if we can scalp in a sell position while waiting for the market to come back down here. So let's go to the 4-hour time frame to see the distance, to see if we can scalp in a sell position. So if we're selling somewhere here, let's see. We're trying to measure to see how we're going to be risking, because reasonably our stop loss has to go up here on around 200 pips if we have to sell this currency pair. If it's going up here on around 200 pips, it means we have to actually be targeting about 400 pips, all right? 400 pips, which is going to give us a risk to reward of 1:2. But do you guys think this market is going to rally that far? That is why this is the kind of trades where you just take while waiting for the original trend to play out. So we're going to sell Ndemazeah JPY at the open of the market because we have the high probability that the market might be rallying from here to this area to give us a buy opportunity. Stop loss is going to go on 200 pips, take profit 400 pips, risk to reward 1:2. So those are the setups we have for this particular week. We've had almost about 10 different setups that we can take. Out of these 10 setups that I've given you, no matter what, no matter even if your curse or your grannies follow after your life or your uncles or whatsoever, you have at least 4 of these trades that will be right. No matter what, you have at least 4 of these trades. If you follow the analysis, you do your own due diligence, you have at least 4 of these trades that will be right. Out of those 4 trades that will be right, if you have the next 6 that are all losers, at the end of the day, you just lost 6% and make 8%. You are just up again by 2%. You are making money at the end of the day. And there are sometimes you can have 5 of these trades that are going to be right. You can have 6 of them that are going to be right, and you only have 4 losers. All right. In that case, you just had 4 losers. I mean, you've lost 4%, and you made 6. You made 6. You had 6 winners. That's 6 plus 2 or 6 times 2. You made 12% and lost 4%. So you made 8% at the end of the day. So you see the power of risk to reward. So guys, I'm sorry because throughout the video you can see how I've been trying to battle with my health. At least I'm actually suffering from common cold or from flu because this is actually the heart of winter in South Africa. My AC throughout this video, the AC in my office is on 30 degrees. I have the floor heating system is everywhere, but it's still very, very cold. But that notwithstanding, I promise you guys I was going to be bringing this video to you guys, and I've tried as much as possible to bring it out, and I'm very, very confident because the same trades I just told you guys, these are the same trades I'm going to be taking myself. These are the same trades I'm going to be placing. I'm going to be managing the same way, and we're going to be able to come back on Wednesday or Thursday to still do like an intra-week analysis to see which of those trades went in our favor and which of those trades didn't go in our favor. Thank you so much for watching. If you want to be part of my inner circle, if you want me to mentor you one-on-one, show you how you can generate most of these signals, show you how you can be able to trade profitably and join us on the top 1%, then check out the link for Godlove University on the video description. As soon as you enroll in Godlove University, you automatically become my mentee, and we'll be able to do Zoom sessions, one-on-one sessions, and trade together. You also have access to my private Discord community talking about robotic trading. Part of my portfolio is invested into manual or technical trading like what we just did today, and part of my portfolio is also invested into algo trading or robotic trading. That is why I have Perps Pro, which is a viral Forex robot now. It's accepted by all pro firms. So if you want to use Perps Pro, just check on the video description and you'll be able to use Perps Pro. You want to use my recommended broker or my recommended pro firms, check on the video description and you'll be able to see the links to all those good stuffs. Thank you so much for watching. If you've enjoyed the video to this particular point in time, make sure you leave a thumb up on the video. That is going to mean a lot to me. Click here to be able to watch a video which I made about trading strategies that will help you. Also click here to watch a playlist which I prepared for you. Click here to subscribe to the channel if you haven't done so, and I will see you guys on these other videos. Peace.